I do that very minimal, and it's kind of just only adding to winners. And I like to keep maximizing my reward until I kind of get that feeling like I either oversized, where I'm not responding to the price action correctly. I knew I took too much size. It started to make me emotional. My average is worse. So then I will take off the size that I put on before I got emotional. So if I had 1,000 shares and then I put on 1,500 and I started to get emotional, then I will size back down to 1,000 shares because I was okay with 1,000 shares.
All right, welcome back, everybody, to This Week in Steady Trade. We're filming this on May 20th, and we're going to go over plays since our last episode, which was filmed on May 13th. Update everyone. So let's just start with, how's everyone's month going? We'll start with Kyle and then jump over to Jack. But how's the month going? We're almost to the end of May. I think this is our last episode of May. We might squeak one more, but it's pretty much towards the end. So
yeah. This month is nuts, man. This month is so insane. I think was it the week? Was it last week or 2 weeks ago? We said it was slowing down. We thought it would end of summer. And every time we say that, we're proven wrong. It's quite insane. Someone made a good comparison on Twitter. Someone who followed me, they commented like, "This is almost just as speculative and insane as the .com boom." And I wasn't live then, but if I had to guess what the .com boom felt like I feel like this would be it. Like everything, we have at least 2 or 3 runners a day going up 100%. OTCs are back. There's plays every single day. It's nuts. So
definitely a good month for OTCs since the beginning of the year. It's been a really good month for OTC longs. And other than that, listed stocks, they've been continuing their strength that they've shown since the beginning of the year. Coronavirus is hot sector. It's still lasting. And my month's actually really consistent. I'm not putting up my biggest number wise, but my goal was not to take a large loss this month because I kind of, I've already made a decent amount of money this year. So I just kind of want to focus on consistency. And I know I can bang 2-3 grand a day on average and pump out 10K weeks and just stay consistent and not size up huge and potentially take huge losses and then let it snowball and just stress myself out. So just focusing on consistency, smaller risk, letting the trades work for me and just not getting emotional or just trying to have a little bit less stress out there. So that's how it's going for me. What about you, Big Matt?
Yeah, I mean, for me, it's currently, if the month ended today, it would be my new best month by like about a 50% increase, which is absolutely nuts.
Yes, sir.
Oh yeah, Big Matt, let's get it.
Yeah, and it's just the crazy amount of opportunities. Like, I didn't trade it, but like SRNE traded like 500 million shares last Friday, which is just insane. It's insane. I've never seen anything like that. There's so many people day trading, which creates so many opportunities. And every day I don't have enough screen space. It feels like most days my scanners are overloaded because there's so many plays, and I've never seen anything like it. It's absolutely awesome.
The kid's in the candy store right now. Look at him.
I am though, dude. I am. It's awesome. I hope it continues. I mean, I know it's probably going to come to an end. We thought it was 2 weeks ago, but it's still going. So as long as it keeps happening, I'm going to stay in the candy store.
Yeah.
All right. Kyle, you want to pull up your screen and we can start breaking down some of the charts from the last week.
Let's do it. So VTIQ was, I believe, our play to watch from last episode. I think we recorded on the 13th when it had this massive bounce, and me and Jock talked about how we gave back so much profit from being up multiple dollars a share to then having this huge bounce squeeze us back and ultimately having to leave a lot of profits on the table. And I think we said either this kind of move was very scary. We thought it might squeeze higher, but ultimately we're going to react to whatever happens. And the fact that it is up from, under $10 or like 12 or $13 to now $30, we are looking for that backside. And so the next day it did gap down. I personally couldn't, if you know me as a trader, I despise gap downs. I just hate trading them, even though I do make money trading them. So unfortunately I took much smaller size. I shorted into, the morning spike here, and then added on this bounce here. And then ultimately when it, quadruple bottoms here at 25, and then 25 is the previous low from the day prior, I have to get out. I don't think it's going to break down. So I covered, and I actually did avoid this bounce for the rest of the day. And that was that. How did you play it, Jack?
Yeah, I remember playing it pretty similar to Kyle, except I had shorted the bounce after it did bounce back. I was just playing it for like a dollar a share, just kind of shorting the squeeze and then just kind of covering into the dips and made a decent little profit there. But it was nothing too rangy where, we saw a $10 unwind the day before. So it was just kind of a tough stock in my opinion, and that just has to do with the larger market cap, the more legitimacy of news, the higher price. It's not just like, I wouldn't call this stock a pick, you know what I mean? So it was a little bit harder, but definitely learned a lot from it, and we'll be looking forward to another play like that in the future.
Next play, we're going to ACB here. Take it away, Jack.
Okay, ACB was one of the best listed shorts I've seen so far this month, and it was just a reverse split. And ACB is actually a weed company, and I've been following this stock probably for 2 or 3 years now. I remember it trading back at $12, and then it kind of came all the way back down to sub $1, and they did a reverse split, and they came out with earnings. Then it just squeezed up from $5 to $20. And obviously, I'm going to be looking for the backside short on that because it had 3 perfect green days, holding green to red, gapping up, having strong days, strong volume. And then the 4th day, fortunately, we actually got a weak gap up where it was very weak pre-market there. And I was telling Kyle, we've had VTIQ and a few other names that have just kind of been chopping us out. So I was like, hopefully we can just get a really nice unwind on this one today because it's, a good setup. We both agreed. So I started in there on pre-market, and then I kind of just added all the way into the winner. And it went red there. Red was around $18. And
yeah, I think it might have been during the choppiness right here, mid to low 17s, I think it was.
Yeah, mid to low 17s. So we got short with a 17 to 18 average, and we were covering some down in the 15s into the morning wash there because, it was straight down from 19 at the open and $4 wash, probably a bounce is coming. And then a bounce came, and me and Kyle actually added back onto the bounce in the 1650s, kind of using our new risk as the previous close and VWAP kind of area. And then, just perfect price action where it just goes sideways and we start to fail. We lose 16, and we got that secondary morning panic. So we were able to cover into those dips down there in the low 15s and mid to high 14s, and basically just wrap that up as a really, really nice, well-executed trade. And money-wise, it was one of my better trades on the month. And then we got to short a little bit more today. Kyle, if you want to go over to today.
Yep, there you go.
It was just a second red day pattern where it had triple topped at the 1425 level. So I had shorted a little bit into the triple top, kind of risking the previous close. And I would do this sometimes because I personally don't like swinging NASDAQ stocks overnight. I like to come in with a fresh head every day. And then if I am going to trade it, I'll enter pre-market sometimes. So I just shorted some ACB into the pre-market highs there, and we got another $2 unwind just beautifully under VWAP. So really good stock, and me and Kyle will be watching the stock because as it proved today in after hours, I guess some news came out and it squeezed back up. So back on my radar. We got some resistance ahead, so we'll kind of see. It's probably going to be more difficult of a play than the original run-up, but we'll look for some obvious signs of potential backside. Maybe, you could take it for a spike into the 20 resistance for kind of a pullback and just see kind of gap and crap scenario, or hopefully, I hope, it's just really strong all day and it squeezes out. Maybe it runs a couple more days and we would look for a backside, but I really don't know what's going to happen with it. I'm not even sure what the news is, but we definitely will be watching that because it's proven to be a really good trader.
Awesome. Badass. That was a really nice first red day setup, and like you said, it's just perfect price action for what you want to see on an ideal first red day.
Yeah.
Yep. Yeah, it was under VWAP all day long. So if you had used VWAP as risk, I mean, you wouldn't have recovered. It just all day fade. One of the easiest, I wouldn't say easiest, but one of the most stress-free trades I have had all month, to pay out pretty big. So that was really cool. And then go ahead, Jack, for NNDM.
NMDM first got my radar yesterday when it started kind of going parabolic towards that $2 area, and I kind of looked and it was already up from 1. So me and Kyle played a little bit of this on the front side. Of course, you're using smaller size because on the front side, it's not as, you're fighting the trend really. And it's kind of like Sykes's OTC panic dip buy, except this is a NASDAQ going parabolic, and you're kind of looking for that trend change pullback area. So we had taken a couple break-even trades on the way up, but then we eventually shorted that significant lower high at 350 and wrote it down for $1 a share. And I got out for a small gain on it, and Kyle got out for break even or something. It wasn't too ideal of a trade, but we're trying to get a little better and expand our strategies, and we're recognizing that it's not an ideal place. We use smaller size, which is key. If whatever your bread and butter is, like, that's where you should size into and kind of push the envelope there. And if you're trading something new, like, don't just kind of slap like a bunch of shares. It's just not ideal, and you really can get emotional because you don't know what you're trading. So going into today, NNDM was on a radar because now it's super extended, squeezed out after hours, just an absolutely insane move. And then today started downtrending pre-market, and I kind of was leaving alone, waiting for the open since it had so much volume the previous day and it was gapping up. So I left it alone pre-market, and then did an offering at $2 a share. So, shorts got a huge win there. Basically just went right from 4 to the 250s there. And then I was interested in shorting a potential spike back into resistance. And I left it alone all the pre-market, and at the open, at the around the 375-ish level, I got short, thinking that it potentially would stuff into previous high day, which was around 4. So I kind of got short at 375, and right there, that $4 level, and it squeezed right through that. And once again, I had small size in the stock because it's super volatile, and I wasn't going to chase up my covers, which is a little more risky. But when you have a bigger account, I was going to kind of wait for the dip to then judge risk. So I would let it squeeze up as high as it would go, and then when it puts in the top, then that becomes my risk. And that's what happens sometimes with these NASDAQs, and that's why I preferred OTC when I started, because it was a lot easier to control risk. But it just didn't make sense for me to chase up a spike that had done an offering at $2 a share and now is bounced into the 4s, which is up over 100%, and then it slammed down. It's just super, super volatile. And then I had changed my risk to kind of that $4 failed bounce, and it went red there. And then it was just kind of a mess, and I covered for break even. But then fortunately I got short back into the 420 range there on that high. Yeah, got short into that and faded it back down to 350. So it's just a little winner, and it was just insane price action. So I'm very happy that I didn't press size on this kind of stock. I just took smaller size. I recognized that it was more dangerous of a stock, and just take it for what it is, take the lessons that it gave me. I got out for a profit both days. So it is what it is. Dangerous, low float. I learned my lesson that these things are just crazy. So that's all I got on that one.
Let's do SPOM here. This one was so freaking awesome. Okay. So I'll go over it, and then Jack can chime in how he played it as well. I actually did not play it at all until today. I wasn't even on my radar. I think I tried longing it maybe a week ago and just totally butchering it because I just suck at longing. But we go from a sub 10 cents to 25, consolidate, break out again. We go to 40 cents, pull back, consolidate some more, and then all of a sudden we have big 3 green days, 1, 2, 3, all the way from 20 cents now to 60 cents. Now, if we actually, let me try this here. Let's go to the daily, see how quickly this loads. Here we go. So you see this resistance level at, what's the high there? 68. And so going into these 3 huge green days, we're now approaching that resistance level. And so it's a very key inflection point in the chart where we now can see, is it going to break 68 or is it going to fail there? And if it fails there, it is already extended, from, 20 cents. So the odds of it failing at 68 and then just holding, right near its highs there is very unlikely. So we were going into today, seeing what was it going to do? Was it going to break out or was it going to die? And so right out the open, there was no strength whatsoever. It immediately starts breaking red on the day, which was the first red-green move or green to red move that we've now seen in 3 days, which is significant. Me and Jack both got short right into this move. I believe I took off a fourth of my size very quickly into the 50s here, or the exactly 50, just because I wanted to lock something in and I knew a bounce was eventually coming. Of course it does. It tests red, it holds, tests again, it double tops there. And then we make this new kind of a weaker low of day midday. And now I was sitting more cover orders on 46 cents. The low of this bounce was 46.2. And so at this point, I'm like, not furious. I'm just really disappointed. I'm like, you kidding me? I missed my cover by a 200th of a penny. And it fortunately gets very liquid midday. So I didn't cover any of this bounce. And at this point, I'm thinking, oh no, I'm going to get squeezed. I'm starting to get uncomfortable. And so, but luckily I called Jack on the phone and we just stayed patient. We're like, you know what, let's just let this play out. If this closes red, we want to swing overnight. Let's just wait till midday or late day comes. And so we keep fading. We end up holding under VF the rest of the day. And all of a sudden, out of nowhere, this thing just collapses. If you were watching this play and you're watching the tape in the level 2, there were these air pockets where there were no bidders for whatever reason. So when it broke like 46 here, it immediately dropped to 43. Under, the first one print was 45 and the very next print was 43. Immediately there's a huge gap between the level 2. I covered a little bit, it then bounced, and the next thing happened. It broke 40. The next thing that happened, it went to 36, and I covered all by 36. And then a second later, the next best bid was at 30. I covered way too early, but the action and the liquidity for how much volume was coming in, there were just so many air pockets that, I wasn't going to get the bottom. So ultimately, still one of my biggest gains in the month. And I just dumped. Whoever was manipulating or promoting this stock sold so much shares, and unfortunately, it just never gave a bounce, which just proves, I think we've talked about before with was it BSPK, Matt, right? Or BYZN, where there's no bounce. People are just selling into it. So that was this case here. So that was that.
Yeah, and I actually,
else to add, Jack? Or go ahead.
I'm mostly long, and I tried to dip buy it, which one was risky just because it's towards the end of the day, and usually those don't work as well to begin with. But just absolutely, there was just no strength at all. It couldn't bounce at all, and I got out for a small loss. I managed it pretty well, but just total crap company.
Yep. And I actually got lucky. I actually tried longing. I covered way too early, but then I saw it still panicking. I'm like, okay, this should have a good dip buy. And I actually tried longing here at this bottom at 26, and I just missed my fill. I was too slow. But then once I saw how weak the bounce was, I immediately canceled my order, and it was I got lucky. I was happy I didn't get filled. I was like, this thing is going to die lower. I'm glad I didn't get filled. So I dodged that bullet there.
Yeah, I went short there with Kyle, and I played it a little bit differently, where I kind of shorted some before it had gone red, just at the open when I saw it kind of failing, and then I added when it did go red, and I took a little bit less size than Kyle, and I kind of wanted to take the more patient approach where I was kind of already going into it like, okay, I'll swing this down. My price target was 35. So I had around a 58, 59 average, and I just held it through the entire day. I was trying to cover some in the 46 area when Kyle said he wanted to start covering a little bit. I just noticed it was a liquid. I was like, yeah, this is kind of this isn't that good. And that was just me getting a little impatient. But then decided I was going to hold on to it, and late day, yeah, just absolutely dumped. And unfortunately, I covered all of it. Sometimes I get these price targets in my head, right? I said, okay, I want to cover 35. So I just put my cover order at 35. So it's just me predicting instead of trying to react. Whereas if I had canceled my cover orders and I was like, okay, I'm going to wait until I'm going to react to the bottom instead of placing my cover orders, it's, wish orders or where you want to cover your profit target. Sometimes that can hurt you, and sometimes that could help you if you're decent at predicting the move to the downward. But I was just awful at predicting this one. Obviously, this stock just absolutely collapsed, and it was something I didn't expect. But nevertheless, it was an amazing gain for me, and I actually did dip buy. But fortunately, I dip bought the dead bottom of the bounce. I got the exact bottom, and I got a pretty sizable position because I've been nailing these dip buys on these OTCs lately, and it didn't bounce too much. So I knew that I was sized in the stock's a liquid piece of turd. That's what I know it for. So I had sized them out into the bounce like for a cent or two. So I took off 2/3 of my position, which is really, really good because this could have turned into a decent loss if I got, executed at the dead bottom after the fake bottom got in. So sold 2/3 of it because I recognized I'm not going to fight the tape. The tape was super heavy. I'm not going to fight it. And I saw some people saying that they blew up on this dip buy, and it's just take it as a lesson. You know what I mean? Like afternoon dip buys, it was a good reminder. Afternoon dip buys, they're not good. Don't buy stock that has dumped from 70 to 5 cents before and just proven that, people are willing to sell this thing all the way down. So I got out actually for a small profit on this, the dip buy, which I was super grateful about. And that was one of my better trades on the day, just minimizing that potential huge loss. Really good trading there. And that was basically it. So that stock's probably now done off our radar. I doubt it can make a recovery after that kind of dump. That was just an absolute liquidation of this company. So
I want to add a good point too that you made, Jack, about the predicting versus reacting, because this particular ticker was hard to do that in my opinion, because it's very easy to react to a stock when there's a bunch of volume, especially for OTCs, because when there's a bunch of volume for OTCs, you can start to read the level two, you can start to see the bids firm up, you can start to see the ask thin out, and ultimately you can be very quick and react and get time tops and bottoms. But because this was so illiquid throughout the day, I had no idea this type of volume was coming in. If I had known this much volume would be in, then absolutely, it's very easy to time. The bottom, for the temporary bottom at 25 here was very easy to see. But, not knowing this volume is going to come in advance, for me, I personally had orders set just because I thought if I didn't cover into weakness, if I didn't try to predict where I was going to go, if I tried to react and it was so illiquid, this thing was going to bounce, 10, 20%, and I was not going to get my cover. And perfect example of that is right here. I had covered some in the 41s and 2s, I believe. And the next thing you know, the stock's hitting prints back at 45, and I'm not going to just try to get filled at 41 instead of just hitting the ask at 45. So this ticker was a little bit difficult and tricky in that sense where, unless you knew the volume was coming, it was going to be hard trying to choose between whether you're going to predict where the price would go or reacting and trying to covering, seeing that volume and that level two change. So that's my little part on that.
Nice. Well said, boys. All right.
Yeah.
So TomZ is an OTC, and this one's a long trade. We recorded our last episode on the 13th, which is this day here. And I don't think I played it on the 14th, but I was watching it because after that one big green day, it more or less went sideways this way, and it definitely went sideways on the 15th here. So for like 2 days after that first green day, I was really watching it because it was going sideways, and I actually took a position here into close, just like a starter, because I was looking for a breakout the next day, and kind of learned that tactic from watching Jack, Dom, and Kyle play OTCs back like a year ago or more, because when they were running, like a lot of times you can more or less predict when a breakout's going to happen. And sure enough, I got lucky. They had some news and immediately just boom, ripped, spiked out of the gate. And I locked in, I want to say like 1,500 or $2,000 on this trade, on this breakout. But then it was weak the rest of the day. But I wanted to keep it on my radar because even though it was weak, it still more or less held the breakout level. So I was watching it, and they had some type of news again. So obviously the company, they're trying to pump their stock price up because as the stock keeps breaking out and holding these breakout levels, they keep coming out with more news, which is getting more attention. And I missed, we're at now on the 19th, which was this Monday, I believe. Yeah, or Tuesday. I don't know, a couple days ago, the 19th. It spiked out of the gate, missed the spike because I wasn't expecting that after such a weak close, and then it spiked up. But then as it continued to hold, and there were some bidders here, it was holding the the dollar level. That's what I was looking at. And I think I got in around 104, and then I kept adding just because it was holding that key level. The breakout level is also a whole dollar level is pretty key. And then I started sizing in this is a 15-minute chart, but as there were some higher lows and support kept building up, I entered in here, and here it kept adding, and then sold out into the spike for like a 15% gain. And that's kind of what I'm looking for when I'm playing these OTCs. So looking back at a daily again, you can see what I was talking about, where it went sideways pretty much for 2 days after the first spike day. I mean, that's like picture perfect. It's holding way more than half its gains. And as soon as that news catalyst came in and really spiked the stock in the morning, I mean, that's like one of the best OTC breakouts we've seen probably in 2020 so far. And the OTC market in general has just been really popping off, which is absolutely awesome. And I mean, Spam was a bad one, kind of a sketchy company, but if you would have looked that up and known that, you would have kind of known to avoid it. But TomZ, I mean, you just love to see OTC breakouts. Like, it's been running for 3 days now. It's a little tricky now on the third green day. I wouldn't really want to touch it. And I know you guys are going to talk about that in a second, especially because there's resistance back here. But I mean,
yeah,
textbook.
Killing on the long over there. Yeah, that's dope.
Exactly.
But yeah,
that was my trade.
For plays to look forward to, this is definitely one of them. This is very similar to what I talked about on SPOM, where it's now approaching, that 150 resistance level, and having 3 green days going up into it. It's unlikely to break that level. Now, does that mean I'm just gonna bet against it and say, yep, it's not gonna break 150? Like, no, of course not. I want to react. I want to see how it is. And the fact is, it's only at 130. So shorting at 130 and risking 150, it's a little bit too far of risk, and there's too much leeway in between trying to find out whether it's going to get there or not. So going into tomorrow, I want to see how big is the gap going to be. Like, are they going to put out a new PR and gap it over 150? Like, that would be insane, but it's a possibility, right? You have to consider everything that can happen. Are they only going to gap it to 140? Are they not going to gap it at all? If it goes red in the day, I might want to short, but at the same time, it is, from that consolidation level of 85 cents or so, that breakout that Matt was talking about, it is only up from that level to 130, which is only like 40 to 50 cents, which, yes, that's extension, but that's really not as much as I would personally like. So if it were me, I kind of hope it comes out strong. I hope it breaks 150 and we go to 2, right? If we go from 90 cents to 2, I'm going to be all over that for the short. So we're going to see how tomorrow plays out. Maybe it taps 150 and then fails, maybe not tomorrow, but then Friday. A bunch of scenarios you got to play through and be prepared for, but I'm ready for whatever happens. So
all you tainted short sellers, picture perfect play for me would definitely be a spike into 150 and fail, but I don't want it to fail hard, just like
hard. Yeah.
Fail. It can't break through that level today, especially because it's up 3, would be 4 green days in a row tomorrow. And if it fails there, but then starts holding up, I don't know, say like the 120s more or less, and goes sideways. The red day, green day, doesn't really matter as long as it goes sideways for a couple days in that level. And then like next week, maybe Friday at the absolute earliest, Monday, Tuesday next week, we break through the 150. I'd be all over that for a long, because then it's a huge multi-month breakout over that 150 level, which is, a $half level now. So that'd be a huge breakout. That's a big ask, but if it happens, that'd be perfect.
Yep, I agree.
I don't think it's happening.
I can wish. I can have a wish, man. I think you're probably right, but if it does hold up, I'll be all over it.
Yeah, I just see. I see a lot of these kind of setups fail, like KBLB, SPAM, INO today, when they're just spiking on a catalyst doesn't seem too important, and the overhead resistance is bigger than the current volume, and we're already up from 50 cents. I'd say odds are the stock has a red day tomorrow and kind of fails to break out and kind of fades back down. But who knows? I have a very biased approach on this, but I'll just kind of react. It's not a trade anyway that I'm licking my chops towards to play with a lot of size, unless it does what Kyle said and it's just super strong tomorrow, big gap, more news, through 150, goes to 2, all while not going red. Then we have a big setup on our hands, but we will see what happens. Like I said, I think that is going to fail, so we'll see.
Absolutely. And I just want to reiterate what you said. You've said it multiple times in this episode and in past episodes is just reacting and not predicting. Like, we can throw out all the hypotheticals we want, but at the end of the day, whatever the price action is going to determine what place sets up. So.
Yeah, totally agree.
All right, before we completely sign off, we asked you guys on Twitter through the StocksToTrade Twitter if you had any questions for us. And we're going to try to do that, every week, every other week, and we're going to answer a couple of them every week towards the end of the episode. So this week, we got one question that goes, cutting losses quickly is a resounding mantra. Do you guys base your stop on your personal risk tolerance, such as a percentage of your account, or do you base it on a pattern? Like, if a stock does X and the pattern is broken, then you get out. What do you do?
So by your question, I think both. So when I first started trading, I picked a one risk level for everything, right? Didn't matter what the setup was, didn't matter how ideal the play was. It was always a percentage of my account, which was 1%. So if I had a $30,000 account, I was risking $300 on any given play at any given time. That's what it was. As I have developed as a trader and as I've kind of learned about my personality, I much rather if the setup isn't perfectly ideal, I much rather just not even trade it and wait for that one big trade a month and bet the biggest size I've ever had. Not now, of course, not all in. I'm not talking about all in, but I've learned maybe sometimes betting more than 1% or betting under 1% can be very beneficial by how experienced you are and how well you can see how ideal a particular trade is. Like, if we go back to ACB, I was risking about a little bit over 1% of what I was willing to lose, because I knew it was very ideal, right? It stayed under BF all day. It's extended from $8 now to over 20. It was very ideal. Now versus another ticker, maybe like TomZ tomorrow, right? If TomZ tomorrow, it's only gone from 80 cents to 130, I'm certainly not going to risk the same amount that I risked on ACB. And it's all really a matter of not only a percent of your account, but really what you're used to losing, right? For me, I know if any loss over 800 to 1,000, stings a little bit. I know that's something I'm not necessarily comfortable with. So that's kind of like my level. Is that exactly 1% of my account anymore? No, I've learned to just, it's more important to what is comfortable for me than just a number on my account, but it's a matter of personal preference for you. So that's just how I do it. So.
Yeah. Awesome answer. I mean, yeah, I kind of do this, like you were saying, you combine them, and that's definitely, his two parts, where it's percentage of your account or base it on a pattern. It's like, it is a percent of my account and I base it on a pattern. You know what I'm saying?
Yeah,
like,
exactly.
So say I'm risking 1%, which for this example, say is like $300. I mean, I'm risking that on a support level, which if that support level breaks, that is my trigger to get out, which that's how my approach. Jack, you have anything to add?
My approach to risk has definitely changed throughout the years, where in the beginning, I didn't really even know what to risk. I kind of just would just take a trade and kind of just see as it developed, and I was kind of all over the place. And now I do the same kind of thing where I'm never sure how much I want to risk right when I get into the trade. Like, I have a small idea. It's not like I just slap in full size risk every single time, like first entry. I like taking a very small piece, and then after I watch it trade for a little bit, I'm kind of developing the plan in my head, because now I'm watching the stock a lot more clearly, and now I can kind of come up with a plan in my head of how I kind of want to approach this. And from there, I kind of just will size in if it's a winner. And sometimes I will add to a loser, but sometimes when I add to a loser, it's just to I'm very particular when I add to my losers. It's got to be the right kind of scenario, and I do that very minimal, and it's kind of just only adding to winners. And I like to keep maximizing my reward until I kind of get that feeling like I either oversized, where I'm not responding to the price action correctly. I knew I took too much size. It started to make me emotional. My average is worse. So then I will take off the size that I put on before I got emotional. So if I had 1,000 shares and then I put on 1,500 and I started to get emotional, then I will size back down to 1,000 shares because I was okay with 1,000 shares. And it's always good to lock some in. And other than that, it's just all kind of personal preference. And, you know, Kyle did the 1% thing when he had a smaller account. And my risk tolerance is anywhere between, you know, a couple $100 on a not ideal play, and then I will scale into $1 or $2 grand risk on, you know, the plays that I think are the plays of the month for me. You know what I mean? So that's how I kind of go about it.
Well said. Next question, kind of along a similar theme here, reads, I'm stuck between having a little size and my profits being eaten away by fees and overhead, or using too much size and having to stop out even though it's an A+ setup. And if I stayed in the trade, I'd be banking. Should I take less trades but with more risk, or the vice versa? So should they take a lot of trades with little risk, but then they're kind of flirting with fees in terms of profitability, like the fees eat the profitability, or should they take less trades with more risk, so that way the fees don't interfere?
Yeah, I kind of answered that question the beginning of the first answer, which was, yeah, I would rather take 5 trades a month and make 100 grand, just blow it out of the water with 5 trades a month, versus trying to trade 100 times a month and only pull out 20. Right? I'm not only about profits, but about efficiency and energy put into the trade. Right? I'd rather make $100 in a matter of 1 minute stress-free than try to make 1,000 over 3 days watching this stock just bleed my energy out dry. Right? So in terms of, if fees are really eating you apart, yeah, you should probably narrow down what trades could you avoid, what trades are just not worth that fee, even though, yes, okay, maybe you make some money. But if they're just not ideal, not only in fees, in setup, in your energy, your time, like there's probably a good portion of your trades you can throw out. And there's probably a good portion of your trades that, like, this is a high odds of working. This is where I make the majority of my money. And from there, knowing that, it's going to give you that conviction, and it's going to allow you to risk more and stay convicted, right? Like with ACV, back to that example, if I stopped out, I was losing over $1,000, but I was completely comfortable in the trade because of how convicted I felt. Again, I'll say it 3rd time, like blow view out, massive selling. Like when you build that conviction, it's much easier to take bigger risks and still feel emotionally detached because you are so convicted. So if you can find out what those setups are for you, and then find a risk level that you can maybe push size on and then still be comfortable in that setup, I think that's the way to go, 100%. So
there's the 80-20 rule, which is kind of applies to this, where 80% of the time, like so 80% of your trades aren't really going to make you a lot of money, but 20%, that's where most of your money is. So the premise here is focus on the 20%, the trades that are really good and are going to work, than the 80% where you're just wasting your time and probably not even making money.
For me, I'm a little bit more degenerative than Kyle, and I like trading more. So like I said from my previous answers, I kind of just like taking a position and then letting the trade tell me what to do. So when Kyle's convicted too, find your trading buddy. Like when Kyle's convicted, I'm convicted. That's when I know that this is a trade to size into. And it sounds like you're taking too much size and stopping out. And personally for me, I'm never a big I've never been a big player going long. My largest loss going long has been $1,100 my entire trading career, which is pretty insane. Now that I've made, about $400,000, I've only lost 1,000 on my biggest long loss. So that just shows you that no matter what, I just can't build the conviction to risk more than $1,000 on going long. Whereas when I'm going short, I know my personality and I'm able to hold through more, ups and downs and stick to my plan better and kind of scale into those trades because, I usually win the majority of my shorts, about 70%, 60, 67%. And I'm able to size in my shorts and I just take smaller size going long because I'm still able to make 500 to, 3, 4, 500, 1,000 risking 2, 300, 400 maybe. And just kind of wallet pad with my long trades and then my conviction sized shorts. That's where I make that 20% of the 80-20 rule. So I've just found a mixture of doing a little bit of both and just kind of knowing your personality. And man, just keep trading and keep, figuring out what's good at. You're gonna learn through experience. Keep putting yourself in the position, kind of think of when you first start trading, just don't really focus too much on the money. The money's going to be coming up and down all the time, and just focus on knowing yourself. That's what all trading is about, is if you know yourself and you trust your process and you show up every single day and kind of go through the same steps, that's how you get profitable, by knowing yourself. So close it out on that, boys. Really good episode, I think. And I hope you guys all, learned something out there today.
Thanks for closing out there, man. I appreciate it.